Making sure I'm just busy recording the session. You guys can still hear me, right? You guys can still hear me, correct? I'm just busy recording. Awesome. Okay, I'm just busy recording the session so you guys can watch back. Going to be sharing my screen right now. All right, so everything looks smooth. The stream is being recorded so you guys can watch back. But before I do dive into the pre-market analysis, just making sure you guys can see my screen, right? Clear, you guys can hear me, you can see the video, everything's smooth. Okay, awesome. Appreciate you, Black Lab. Appreciate that, bro. All right, so I'm just taking a look at our analysis yesterday, right? So every single day before we start, we're obviously going to take a look at what our outlook was for the day, and whether it played out or not. All right, and whether it played out or not. So, yesterday, all right, I told you guys that typically I don't trade Mondays. All right, I don't trade Mondays because I like to have a little bit more data and more direction for the week. All right, me trading on Monday, I'll just essentially be using, if I had to, Friday's daily range and what happened on Friday. All right, but with Saturday and Sunday happening, a lot of stuff fundamentally could have happened that would have shifted the market to a different direction. All right, and a different bias. Okay, what's up, Liam? Nice to see you, bro. All right, but what I did say was that we have this big imbalance of price. All right, we have this big imbalance of price, and we already understand why we had that imbalance, right? So when the markets closed, price was over here, and then in the new week, price instantly opened with a gap up. All right, so price opened with a gap up, and why? It was because of the positive news with the trade affairs with China and the United States. All right, so because there's such positive news, we saw crazy gains throughout the Nasdaq and S&P 500. All right, now because of that huge imbalance of price, right? It's a lot harder for us to scope out entries, right? Because now where price closed, which being over here, it already opened up way higher up, which was above our last week's high. Already clocked off at our last week 1.618. So there wasn't a lot to work with, all right? But regardless, because there wasn't a lot to work with, we still had two trade setups, all right? Now remember what I said, and if you guys don't remember or you don't know what I'm talking about, head over to the live markup recordings and just rewatch that video, all right? Because I went over everything on that video. And to be very honest with you, it played out perfectly, all right? A little bit too perfectly. All right, so the analysis essentially that I had on Monday was we have this imbalance of here. All right, I am bullish because purely how the market opened on Monday. All right, market opened with a gap up, so I'm bullish. And if the market didn't open with a gap up, I would have been bearish. All right, I would have been bearish because on the weekly time frame, if you remove our joins over here, all right, this could have been the start of an evening star Japanese candlestick on the weekly time frame. All right. And why this is so beautiful for a bearish momentum is essentially a downtrend over here of price, right? Since essentially the tariff announcements. And then this premature evening star formed right under the 50-day moving average, right? So this would have been the perfect time to have a short bias in the market. Okay, but because the new week and Monday opened higher, right? That completely shifted our bias to now bullish. So looking at the 15-minute time frame, right, I'm going to go over exactly what the trade setup was for Monday. And then after that, seeing our price played out, we are going to justify and look for a trade today. All right. We're going to look for a trade today. We did have, what did we have today? We had CPI, right? We had CPI today. But regardless of CPI, we could potentially still find an entry. All right. So the analysis and trade setup that we had on Monday was essentially longs once we fulfill this imbalance, all right, and also tap into our golden zone, all right. So we were eyeing for long positions close to this area over here, all right. It would have been something like this first TP, and then high up to the 2.618. All right, something like this. But we had an earlier setup, all right, because we had a fair value gap over here, all right, as well as the retest of last week's 1.618, all right. So just taking a little pause on the analysis quickly. Are you guys with me so far? You guys understand everything that I said, right? Does it make sense? Yes, yes. Okay, awesome. All right. Just making sure. I don't want to go too fast and then you guys are kind of just like, fuck. Okay, I should have asked. What is trading? Liam, bro. Let me invite Jake into this conversation quick, actually. All right. So the setup, what we had, which was a second long setup or opportunity, right? But I wasn't favoring this opportunity. The reason why I didn't favor it is because we had such a big imbalance. But I could see exactly why price would start climbing from this point. All right. Now, why did price start climbing? We identified a fair value gap. All right. I'm drawing it twice. All right. Now, if you guys want to identify a fair value gap, all right, once you see a crazy bullish or crazy bearish candle, and you draw your gram box, all right. So the gram box essentially is just 0 to 100. All right. So 0 to 1, just think 0 to 100. All right. Now, with fair value gaps, if price doesn't necessarily fill maybe 65 to 50% of that range that you just drew with the gram box, there's an imbalance, right? There's a fair value gap. All right. So prior to that, we had a big imbalance. All right. I drew it from where the candle came low. This is probably what, like a 80 or 75% full. We needed like a 50 to 65. Okay. Safari, can you please explain why you use the fib top to bottom for bullish bias and when you get a gap? Okay, I'll go over that just after this analysis. All right, just remind me at the end. Yeah, just remind me at the end and I'll go over it for you. So we had this fair value gap, all right, and we needed a retest on the last week 1.618. All right, my philosophy is once something breaks, we need a retest. Same with support, resistance, trends, all right, daily highs, daily lows. So because we had a break on the 1.618 and it was extremely bullish, all right, we haven't yet captured that that retest. So the setup that we would have had, and if you guys again watch that analysis from Monday, we said something like the 50% mark, probably the bottom of this candle. Now, realistically, what I said was the TP would be the high, all right, the previous high of this range prior to it coming down. So the previous high was this, all right, that was the previous high. So that would have been the TP, which it hit just perfectly, and then the second TP would have been the last week 2.618, right? Just ignore this yes high, ignore this because I didn't do the analysis yet. All right, what's up, brother? I took a 1-to-1 on that. Amazing. Holy girl, great, bro. So did you take that 1-to-1 on this fair value gap over here? Um, yeah, it was a decent trade, you know. Not necessarily like amazing trade, just decent. You know, we managed to scrape up an entry based off what the markets gave us. All right. So we had a nice entry over here. TP would have been there, and that would have been our stop loss. Why? All right. Why is that our stop loss? Again, guys. All right. The way I trade, I can't just randomly have a stop loss anywhere in the chart. Okay. I can't have a stop loss randomly. I like to strategically place my TPs and my stop losses in areas where, for example, if price comes to my stop loss and I'm in long positions, if it comes to my stop loss, price should continue going down, right? Price should continue being bearish. If price hits my TP, price could potentially reverse at that area and maybe come back to my entry or continue going up, all right? Yeah, Yatin, I do, bro. I do. My cough and my sneezing, since I've been here, it's just a little bit crazy. So yeah, just excuse my coughing. So your stop loss and your TPs need to make sense. All right. So now, why is my stop loss basically at the starting point of this huge bullish candle? All right. My stop loss is here because if price fulfills that fair value gap and continues going down and essentially breaks this bullish volume that we had in this price point over here, I could see price continuing going down. All right. So that's why my stop loss was there. Okay. So that was the setup that we had for yesterday, and it played out. You know, played out. I didn't take this, so obviously I'm not going to say like, oh, we hit TPs or we had Ws. All right. But if you guys did trade yesterday and you guys did watch the video, you would have seen this played out perfectly. All right. You probably would have been hesitant at this area where price slightly dipped below the fair value gap. To be honest with you, all right, I most likely would have had a break-even trade with this. Okay, to be very, very honest with you, I wouldn't have probably hit TP. Just depends on what. Let's see what happened on the 5-minute, right? So, 5-minute time frame. We tapped into the fair value gap. Price closed above. I probably would have taken entry just slightly above over here, all right, and then protected entries at the 50 mark zone. So we probably would have still been, yeah, we would have actually hit TP, to be very honest with you. We would have hit TP. We would have hit TP, but our trade would have been in a little bit of drawdown. I thought I took it still in it. Danny. Yo, you must be flying, bro. I thought it fills the fair value gap, then reverses. Yeah, so it did, right? It came into the fair value gap, all right, and then reversed to the upside. So it won't always do that, but we just use fair value gaps as a form of confluence, all right? We just use it as a form of confluence. What's up, bro? Hope you're doing well. So that was our trade for Monday, all right, or yesterday. Now what we're gonna do, 1,000 in Aloe store, bro. Aloe is ridiculous, like off topic, right? But Aloe is actually ridiculously. I don't understand. Like, it feels great, but I don't understand. Okay, gotta make it back today. You know, likewise, bro. Likewise. All right, so now let's look at the setup for today. Okay, now. What I actually would love to start doing is maybe invite you guys, all right, on stream, to start doing the analysis for us, all right? Start inviting you guys to. I know it's like might be like overwhelming or whatever, but it's literally just rinse and repeat, guys. It's honestly the same stuff that we do every single time. The only part where you might be struggling with is actually executing your trade, all right? Executing your trade. And guys, we also still have to name the system. Like, we use golden zone, we use daily highs, daily lows, but we don't have a name for the system yet, right? So if you guys think of a cool name for the system, we can claim it and name it. So Jalal, I'm looking at your analysis. Let me actually look at it once I do mine. All right. Nice Clapper 3000. Bronx don't miss. That's really funny. Damn. All right. So, Jalal, appreciate you sending your screenshot. I'm going to refer to this once I'm done with mine. All right. So, we keep this information. All right. We keep this information. We keep this in balance because look, it's still an imbalance. All right. Last week's 1.618 we still keep. And we still keep the 2.618. All right, so let's just see how the previous day closed. All right, how the previous day closed, it closed extremely bullish. All right, just looking at this bullish candle, price didn't fulfill 50% of that bullish candle, all right, on the previous day. So doesn't mean that it has to, but we probably have a few fair value gaps, all right, just purely just looking at this straight away. But again, how the market opened on Monday and how it's progressing through the week so far, our bias is bullish, all right, our bias is bullish. So what we do, let's go onto the 1 hour time frame. All right, so 1 hour time frame. Now we need to identify yesterday's low and yesterday's high. All right, last week's low we identified, last week's high we identified. We just need last week's low and last week's high. So yesterday's high, yesterday's low. So yesterday's low, all right, we have this cheeky little guy over here. All right, and then yesterday's high, I call my strat Bronx box from 8. That's a mouthful, bro. And then yesterday's high, we have over here. All right, so that's yesterday's low, yesterday's high. All right, now because our bias is still bullish, okay, we draw a Fibonacci retracement from top to bottom. All right, and Safari style. All right, you asked why do we draw our bias from well, if our bias is long, why do we draw it from top to bottom? All right, the reason why we draw it from top to bottom is once we get our extensions. All right, so if our bias is long, we need our 1.61 extension to be where we could possibly take TPs or aim for reversal. All right, same with the bottom, just the opposite. So now we can see, all right, just looking at our extension, all right, our extension matches with last week's 2.618 zone. All right, so we have quite a significant zone over here, all right, because you have the 2.618, all right, as well as the previous day sorry, I can't do low caps. And yes, 1.618, right, which is the yesterday's 1.618 zone. And not only that, we also need to identify our golden zone, all right, our beautiful golden zone. So our golden zone, all right, so Monday GZ, yesterday 1.618, all right, and that is essentially done for our daily analysis, right? Because we identified our yesterday high as well as our yesterday low. All right. Now, looking at what price is doing now. Okay, so 1 hour time frame, I'm shifting over to the 15 minute. Now again, we need to constantly have our obstacles with us. All right. By obstacles, just have a little bit more data on your chart. So once price comes into a key zone, you have more confluences in that zone, right? So that you can justify, okay, I'm taking a long or short entry because of this, this. All right. The more reasons why you have to enter, the better. Okay. So, looking at price, off the naked eye, right, I can potentially see two 15-minute trends. All right. So we have a 15-minute trend over here. All right, and then a potential 15-minute trend on this. All right. Now I know with trend lines, it gets a little bit like there's lines all over your chart. All right. Compared to the previous systems that we were training before, there's a lot more stuff on your chart right now, right? And to some of you guys, it might be a little bit overwhelming, but you want to get to that point where it actually makes sense to you, all right? That you're not trying to be Picasso on your chart. You're just trying to put stuff on your chart so that it makes sense for you, all right? Make it make sense. If something's on your chart and it doesn't make sense and it's irrelevant, take it out, remove it from your chart. It's not necessary, right? So you'll typically see, for me, I'll constantly have, I'll constantly be removing 5-minute, 15-minute trend lines depending on how price moves, all right? The reason why I'm keeping the trend lines below is if price decides to shift to the other bias, right, of being short, and my long bias is incorrect, at least I know where price could potentially go and potentially reverse. All right. So that's why I like to keep the higher time frame trends and also information. So you'll see here, I still keep my last week high. I still keep my last week golden zone. Still the head and shoulders that played out over here. We still have these, which will shift over to support and resistance. But we still have a lot of information on this chart. All right. Now, just looking at what price is doing right now. Okay, so because of fundamentals being CPI, right, price is drastically bullish. All right, price hasn't necessarily came back to our golden zone, being Monday's golden zone, and it's playing above right now, above yesterday's high. All right, yesterday's high. Now we have this 15-minute trend over here, which if price breaks this trend, all right, this point over here, if price breaks this area over here, all right, we could definitely see price shift over to the upside till about 21,300, 21,330. All right. We could see price shift over there, but that would obviously be a late entry. Okay. What I typically like is I like to see price pull back into a pocket for me, and then I'll execute my positions. All right. Now let's analyze where we could potentially enter. Okay, now remember, we always like to look at our golden zone, all right? But the thing is, you can't always become obsessed with your golden zone. That's why it's important to have information on your chart, because if you're constantly obsessed with your golden zone, you're going to force entries only by your golden zone, all right? Now, just looking at this, although this is Monday's golden zone, all right, and we ideally like price to tap into our previous day golden zone on the present day, all right, we haven't received that yet. And for us to receive that, it's a little bit optimistic, all right, because right now price is at 20,940. We would essentially ask for price to come back to 20,675. Okay, and not only will we ask for it to come back, all right, but price obviously broke this 15-minute trend, and then that means it would break this 15-minute trend, play under the 50-day moving average, and retest the last week 1.618 zone for the second time. All right. So if price comes over here, it's going to be a little bit more riskier taking long positions, because we had a lot of validation over here for price continuing to the downside, right? So in this situation, we are trading against the information that's given to us, even though our bias is long, all right? So what I would essentially look for today is price potentially, all right? And it really depends how price reacts between these two trend lines, okay? Price coming back for a pullback over here, um, retesting this trend, retesting the 50-day moving average, right? We're probably looking at a zone like this, all right? So probably 20,804, right? Where would my stop loss be? My stop loss would be at the bottom of my golden zone. So like I say, all right, this trade setup is roughly like a 190 point stop loss, all right? And that's relatively big, okay? But what you need to do is adjust your position size to make sure that the risk that you are applying into a trade is factored into your stop loss. So if you typically are looking for like a 40 or 50 point stop loss, all right, and you would risk, for example, 1%, okay, you need to make sure that 195 points equals 1%, not 50 points, all right? And the reason why we would have the stop loss, to be very honest with you, okay, this stop loss is a little bit way too big for my liking, okay? But the thing is, if price CFD allows me to make my lot size small, my futures account not so much. All right, so in this case, right, what I would do is I would probably work with something like this zone over here as well. All right, so 20,688. Okay, this zone as well. Why I say we would work with this zone as well is because while we're trading, right, and let's just say we're on the 5-minute time frame, if we see price break that trend, retest, and continue going to, or looks like it's going to go to the downside based on the candlesticks that we get, right? We would most likely close our trade early because price would realistically be heading down to this point over here, right? I'd rather take a smaller loss in that scenario and monitor for possible long entry over here, all right? But the ideal stop loss would be something like this, okay? But you would monitor how price reacts on that trend line and that 50-day moving average. And in terms of TP, right? So the final TP would be this. All right, so that's the kind of trade setup we're looking at. But we have obstacles. All right, we have obstacles. So what would be the first TP if we enter a long position in this scenario, right? First TP would be yesterday's high, all right? We would monitor for a possible take profit at yesterday's high. So in that scenario, okay, this would be the first TP, okay? Once we hit yesterday's high, I would move my position to break even, okay? Maybe even at 20,900, I would move my position to break even. All right. Second TP would be the retest on this 15-minute bullish trend. All right. So once we get a retest on that 15-minute trend, that would be your TP2. All right. So that's where you would take more off the table in terms of profits. All right. But final TP would be this area over here. And we have a lot of confluence for this. Okay. So for today, which market opens in roughly 12 minutes, all right? If we can get a pullback, are you looking at closes on the trend line or just touching it? So if we get a candle closure and retest, then I'll count that as essentially price continue to the upside or downside. Right? I need a retest and closure outside or above. So for New York session, all right, again, we have two scenarios, all right? Possibly taking trades on this 15 minutes here. And if we do take trades above here, right, our stop loss would be just slightly under our yesterday's high, which I'm not a fan of, okay? This kind of trade setup, I'm not a fan of, okay? The ideal situation would be us getting our pullback to our trend, all right? touching our trend for the third time, and then continuing to the upside. That's the perfect setup for me. That's what I would be looking at for Nasdaq today. This exact position. All right, guys. So that's the trade idea for today. All right, we have market open in 10 minutes. I'm going to be trading live with you guys. But if you guys have any questions on the analysis, or if you guys have a different bias, please share it on the chat. Let me know where you guys heads at. And yeah, PMAC, well, that's a great analysis. Thanks, bro. I appreciate that so much. I'm glad you enjoyed it. My goal, guys, all right, my goal with this is I don't want to just say, guys, we buying today, we selling today. All right. Like I said when I sent the announcement to the group, the main thing is that you guys get value out of these streams, that you guys can learn a skill or just supplement your knowledge with trading. All right. And me breaking it down, that's the only way that you're gonna essentially get to that point of having more knowledge or supplementing your knowledge. All right. Me just saying, we're buying at this point with no context, it's not going to help you in the future at all, right? And with your trading, you're just going to be like, okay, all I know is that 20,000 we buying. You're not going to learn anything with that. So as long as you guys are learning and you're progressing, then that makes me happy. SMA settings are 50 and 200. Appreciate you, bro. Appreciate you, Black Lab. What's the TP in between previous day high and last week high? What's the TP in between previous day high and last week high? So I think you mean previous day high, so yes high, right? So 20,922. That would be the first TP. And then I think you're referring to the 1.618, right? Ella. So if it's a 1.618, it would be 21,311. Can you please put S on TP here? I can't see. Sure. Again, don't just trade based off the stop loss and TP that I'm giving you guys, right? Although we have our outlook, we prepared, all right? We prepared for the potential setup, right? We need stuff to happen in the smaller time frames, and particularly in our pocket of confluence prior to entering. Okay, so the stop loss in right now is just like a basis, right? I wouldn't purely just rely on these figures. 20,923 TP2 is so retest on 15-minute trend, all right, whatever price point that would be, and then TP3 would be 21,311. So that's the rough SR and TP. Would you ever take a trade against your day bias? I would. This is a thing. So in situations like that, and I've been in situations like that before, I would essentially trade to my entry point, all right? And then, so for example, if I'm long, right, I would look for a short opportunity to my area where I'm looking for price to touch, and then go long from that. That's the only real time I'll trade against my bias. The thing is, if the big move is against my bias, all right, I won't trade, because then, then I don't know what I'm doing. All right, then I don't know what I'm doing. But sometimes I would try trade to my entry point. And then, those trades also work out really great, and it might be, yes, you're taking 2 trades, but if you're going to take 2 trades, all right, instead of risking, let's just say you're only going to risk 1%, all right, in your funded account, you're only going to risk 1%. Then the first trade risks 0.5, then the other trade risks 0.5, equals 1%. You can take 2 trades, all right? but you just need to be conscious with yourself that you're not going to overtrade in the future with that. Okay. So we don't have to look for chart pattern or candlestick trend line entry is enough. So trend line entry is one form of confluence, Jalal. All right. One reason why you should enter. The second reason, okay, yes, 50-day moving average. But the third reason, which is great, right? Because you have more reasons to enter, is the Japanese candlestick that will form on the 5-minute and 15-minute time frame. All right. So the moment we see price come into our pocket for entry, we'll dial down into the 5-minute time frame and keep on shifting between 15-minute and 5. See what's happening on the bigger time frame. Are we getting a premature bullish candlestick? And then we look for entry on the 5-minute, right? So I always use candlesticks because, again, candlesticks is the language of trading, all right? The language of trading. If you understand how the chart feels, how the buyers feel, you guys must also how I interpret candlesticks, right? Trading is filled with emotions, okay? Emotions from buyers and sellers. So, depending on how that candlestick closes, that is the emotion with the buyers or the sellers, right? So, depending on how a bullish candle closes, that tells you a lot about how the buyers felt in that particular price range, all right? Depending how the bearish candle closed, that tells you a lot about how the sellers felt, right? So that's why if you have long bodies, long wicks, small bodies, that's essentially candlestick trying to tell you, like, look, sellers were extremely confident in this area. We sold a lot, right? Buyers were extremely confident. We had mixed emotions, right? The buyers and sellers were competing against one another. So candlesticks are important just to understand what the language is, the language and interpretation of the emotions of the buyers and sellers. Would you prefer a drawback to the SMA or to the golden zone? A stronger drawback sounds better, right? So to be honest, and I said this just earlier, right, Tom, that you don't want to have this attachment to the golden zone, all right? You need to be tough on yourself when you do the analysis and stuff, because although the golden zone sounds amazing, right? Because we always refer to the golden zone, but the reason why I'm a little bit against the golden zone today is because if price comes all the way to our golden zone, right? That means price rejected on this 15-minute trend over here. This 15-minute trend, price is trading below the 15-day moving average, and now price is retesting this 1.618 zone, right? So because it's retesting the 1.618 zone again, I would be a little bit hesitant to take long positions. And we could definitely still take long positions in the golden zone, but it's just going to be a little bit more higher risk, to be honest. Hope that answers your question, bro. Will you be posting this? Yes, everything's recorded right now, so we'll be posted on the YouTube. You guys can rewatch it, and hopefully, learn. Do you try only take one trade a day? I don't mind taking like 3 trades a day, to be honest. Right? It just depends on how confident I am, and depends what I've achieved in that day. All right. So like if I hit my daily target already, all right, there's no need for me to look for more. Essentially, if I already hit my maximum loss for the day, I don't want to dig deeper. Was the weekly close on Nas bullish? Last week closed bearish, right? But because this week opened above the sorry, above the 50-day moving average, and also invalidated a big reversal Japanese candlestick, that's why our buy shifted to bullish. Algie, what's up, bro? Can you please post it? Yes, this will be posted on YouTube. Makes good sense the way you said. All right, amazing, bro. Are these close enough to study? Yeah, so this is relatively good, Jalal. I again with the course I'm working on for you guys, It's literally, I try and make it as if I'm having a conversation with you and trying to teach you candlesticks, right? It's not necessarily like textbook or whatever. It's so that you guys can actually understand. But yeah, that's a good reference to go based off of. I just need to read it more in detail. But it looks, most of the Japanese candlesticks are there. First test, best test. Silly question, but would you not consider taking sales to go and fill the gap? I would take sales, right? But again, so if you, I think the reason why you said that is because, I'm happy to sell to my area, right? But you can't just randomly take a sell position because you are wanting price to come to your area, right? The area that you want price to go to. So for me, I would have to do another analysis on a potential bias for shorts, all right? I need to look for a short entry. And just purely based on this, I could probably have so let's just say if we were looking for short entries, right? We potentially could have, what's this over here, like this descending trend, but I would like price to at least retest this 15-minute trend or something. If price just tanks from yesterday's high, we could take shorts off that, but it's not enough confluence, right? The way I trade, the more reasons I have to go short or long, the better and more confident I'm in my the better or more confident I am in my trade setup. All right. But if I'm just randomly taking a position based off one reason, that's going to lead you to not having a system. All right. The most important thing is like have a strict rules and criteria for your trades. And if those aren't visibly presented in front of you, it's not your trade. All right. It's not your trade. But yeah, if you had to take a trade based on this, what you could possibly do is have your stop loss above the 15-minute trends, and then your target would be something like this, But for me, to be honest, this kind of trade doesn't, like, just based off this this ratio, it's disgusting. All right. I wouldn't risk a Dogecoin on this on this setup. So yeah. But yeah, our setup was something like this over here. So market just opened 2 minutes ago. All right. Now we just wait and sit. All right. We wait and sit and wait for our entry. Because of how CPI opened, all right, the news that came out with CPI, market was extremely bullish. We could probably see a continuation with that. And if it continues, guys, right, if it continues, we just look for something else, to be honest, right? We look for something else. What I'll probably start doing is tomorrow, I'll create an event on the Discord. I can do another pre-market analysis for gold as well as Bitcoin. All right, because if NAS continues to not necessarily give us a good entry, right, a solid entry that we can actually be like, hey, I'm happy to risk 1% on my account or 2% on my account on this trade, then we look to trade something else. So that's why we have insurance pairs, right? That's why we focus on like 2 to 3 pairs. 4s are out, but try not to go above 4. We focus on 3 to 4 pairs, just in case, we don't have opportunities or trade setups, right? So if we don't get a trade setup on Nasdaq today, we'll do a pre-market analysis tomorrow, focus on gold and Bitcoin as well. But to be honest, if Nasdaq continues climbing, right, which I could see why it would want to, right? Goldman Sachs ups its S&P 500 index price targets. Wall Street set for mixed open after April inflation. S&P 500 index makes a leap, now down less than 5% from second record close. All right, so for me, what I would personally do is, if price continues climbing, all right, we could potentially look for an entry higher up. Um, could definitely look for a position, I mean, an entry slightly higher up. But again, we don't have enough confluence to fully go into this trade and be like, hey, we're going to risk 0.5 or 1%, right? To be honest, if we had to take a position above over here, I would probably risk like 0.25%, to be very, very honest with you guys, right? I wouldn't want to risk like 0.5 or 0.5% on that trade. Reason why is because we are only really taking this trade based off the break and continuation to the upside of the trend lines. All right. And for me, it's not enough. It's not enough to execute a trade like that. It would be a nice tight setup though. We would have TP over here, and then stop loss just below yesterday's high. So that's the kind of setup we could have for late entry. But what I would do is, again, 15-minute and 5-minute time frame, see if price breaks above this 15-minute trend, and then we can see, all right? But ideally, we get that pullback. We can have a slightly tighter stop loss. We just need to monitor what happens on this trend line, how price moves, and then we're aiming for that. All right. Jamie, how much XRP are you holding? Not a lot, bro. Not as much as you think. Let me have a look. I've been buying more Solana and Ethereum though. Ethereum's looking good. Solana's looking good. We also need to tap into these crypto coins. What I said we'll do. All right, so maybe over the weekend. I think more people will be more free on the weekend. We can like dive into like some of these potential projects. There's quite a few that I'm looking to get into, but yeah, nothing crazy. I'm holding roughly 15,000 XRP. With Ethan and JMO Stride, we are about to break out of 5-minute zone. Would a break and retest of that zone be valid for entry? So for me, again, that would be similar to this trade setup over here, right? What we said. But instead of a 5-minute zone, and which guys, with this setup, you guys can also implement like a 5-minute support resistance, 15-minute support resistance for extra confluence, right? You guys can 100% do that. But for me, with this setup, yes, you could take a setup like this, but it's just not enough for me, right? It's not enough for me. The reason why I don't particularly trade JMO's system is because I like to have more reasons why I enter a trade. I like to have more reasons. It's not necessarily because system doesn't work. It clearly does, right? But for me, I like to have more reasons why I enter a trade, and also my profit targets that I aim for are slightly higher, in terms of the ratios. So, but it's not like if you guys ask me like what's my average ratio, right? To be honest, my average ratio is probably like a 1-5 or 1-6, on a standard trade. But I've hit 1-19s, 1-26s, right? Like stupid ratio trades, but it just depends on what the market gives you and what your bias is. The moment you combine all of those together, you can get trades like that, right? But if you guys are more focused on like, just like a a quick kind of trade setup or quick 1-to-1, 1-to-2, then, that's obviously a completely different system. You could probably merge the two together, and which could lead to, you having more confluence on trades. But yeah, I haven't necessarily tried that. Jamie, more of a personal question for me. I feel like I'm in a weird point in my trading. I truly feel I have the knowledge and I can trade, but fuck me, I don't know. It feels like one step forward and two back. Any potential advice? Maybe too low time frame or so okay, let me just read this. Okay, I feel like I'm in a weird point in my trading. I truly feel like I have the knowledge and I can trade. Okay, so my thing would be, all right, it's very specific to the person. Okay, it's honestly very, very specific, and that's why trading is so difficult. All right, trading is difficult not because of the skill set or the technical analysis. That's the easy part with trading. All right, the hard part with trading is once you experience the wins and the losses and go through the motions of trading, a lot of things, variables come into play that kind of throw you off that momentum. All right, and you might think it's one thing, you might think it's another thing, and you can't necessarily pinpoint where the issue comes from. All right. So what I would say is if you okay, let's just analyze what you said. All right, Liam. Um, I truly feel like I have the knowledge, and I can trade. All right. So you are already saying that you have the information, you have the knowledge on what it takes to be a trader and how it works, and you are able to do it. All right. So if you are able to do it and you have the knowledge, it should essentially be sorted already, right? But um, I don't know, fuck, it feels like one step forward and two steps back, right? So why is it that you can progress, you can take one step forward, but whatever makes you feel like you taking those two steps back, why does that feel like it's double, right? Instead of one step, two steps forward, one step back, why does it feel like it's one step forward and two steps back? All right, so my question for you, right, and this isn't the solution, all right? What in your trading happens to you, all right? Um, right click on his camera. Oh, shot, Matt. Appreciate. Um, what in your trading, all right, happened to you that you feel like it's two steps back? All right, what happened that makes you feel like it's two steps back? And it can be anything. You could be like, I was winning for a week and then I lost for 2 weeks, or I was really attached to this one trade and lost and I felt discouraged, whatever, right? Just be honest. What makes you feel like you took two steps back instead of one step back? All right. So once you tell me that, then we can kind of like understand. Hey Jamie, are you able to turn your mic up a bit? It seems. Oh, okay. That's where Matt came in. Shot Matt. So Jamie and Ethan trade a breakout strategy, right? What would describe your strategy the best? I am new here and I try to spot the differences. All right. I love that question. All right, so what would describe your strategy the best? All right. So, my strategy, if you had to take into account everything that to do with analysis, right? It's purely off ranges, right? If you think about the daily high, the daily low, Fibonacci accounts for percentages within the range that you select, all right? And then depending on the top of the range to the 1.618, all right, everything is essentially ranges. Okay, so I saw a lot of correlation between ranges and price would always come into like, there's buyers and sellers. Price would always come into like a 50% zone prior to like going to equal highs or higher highs. All right, so what would describe my strategy the best would be I work off ranges, but I also work off trend lines, Japanese candlestick, chart patterns. So essentially everything that I've seen play out consistently, right? So I've been trading for 5 years and I've had a lot of trial and error with systems and trading strategies, right? But throughout my 5-year trading journey, I've constantly seen stuff that continuously work through, regardless of the trading environment, right? And what I realized is one thing doesn't always work. Okay, one thing doesn't always work. Let's just say if you only trade trend lines, all right? Sometimes it will work, sometimes it doesn't, right? Same with breakouts. Sometimes it will work, sometimes it doesn't, all right? And the stuff that I saw of value, I kind of combined all of them together into what you guys see here today, all right? The system that I built today is essentially the what I find valuable in technical analysis, right, and also mindsets and fundamentals. But what I find valuable and what I've seen work, and I kind of built a strategy that combines everything together, right? But you guys will see that, and the guys that know obviously how the system works, is that every single day that we trade, it's something new. All right, it's something new. We have the basis of the system and the strategy, but the reasons why we're into the trade, the reasons why our bias, we have reasons, which is the most important thing, but it's always different reasons. All right, and you can have a wide variety of reasons, but it's always different reasons. So that's why I kind of like this system a lot, because it's very adaptable to any environment, right? And not only is it adaptable, it makes sense. Um, when you see, like, if you actually have an understanding of the golden zone, daily highs, Fibonacci reversal zones, Japanese candlesticks, right? Um, and you see how price continuously reacts to that, you'll see how it makes sense. So a little bit of a rant, but yeah, it's hard for me to just say